I'm here with Evan from Animoca Brands, the president. We're here in WOW Summit. It's been amazing seeing Hong Kong becoming the next Web3 hub. So yeah, I just want to ask you, what do you think of like the recent bank collapse, and how's that gonna happen like in a Web3 industry? And also from your take, how's the regulation and the governmental side can help with that? And also on the investment side, what do you think from Animoca Brands view, like what would change?
Okay, sure. Maybe one question at a time. We'll
Yes.
answer, right?
All right.
So on the banking side, I think the banking sector is under challenge, right?
Right.
That honestly has nothing to do with the crypto space itself, right?
Yeah.
The market's been up and down. Whenever you get an inverted yield curve, right, which is what happens, the short-term rates are
Right.
like 3-month rates are like 4 or 5% right now,
Right.
and then you get the long rates that's sort of like about, I think about 2%. I don't exactly know the curve.
Right.
So you get a situation where banks that bought a lot of long-dated assets to yield back to fund it with short-term liabilities are losing a lot of money.
Yeah.
If you keep on using your short-term rates to then fund your long-term, assets, it's going to cost a lot of money. At some point in time, they have to square that position. And what happens is that with these banks, and a lot of them are in this situation because we were in about 15 years of very easy money, right? And in that situation, we get to a point where some of these banks are having to take losses to square off the long-dated assets, right? Now, when that happens, like an SVB, actually it's not really a crypto bank, right? It's a startup bank, right? It's very unfortunate it gets tied into the whole space, but what then happens is that then they scared the market, and then it became a liquidity issue, right? Yeah. So the banking industry itself is not one that is about one-to-one matching of deposits. Right. In fact, if you look at some of the stable coins, like for instance, the famous one that people now use a lot is Circle, right? Yep. Right. USDC is basically all collateralized, right? Yeah. It's actually from a perspective of looking at finance, it's actually safer, right? Yes. If you look at DAI is a little bit algorithmic as well, but it's not algorithmic as in Terra Luna. It's actually over collateralized, right? If you look at it from that perspective, and the transparency that you see are actually safer, right? Yes. So it's not like that. Yeah, there are crypto that could be a little bit like, based on algorithmic, like Terra Luna didn't work out. But at the end of the day, right, they're not all the same. It's about the philosophy. It's understanding the structure of what the space is about, then about thoughtful regulation, what you asked, what you talked about, right? Yeah. Because at the end of the day, we at Animoca Brands believe that for the space to grow, you have to regulate thoughtfully, right? And we're big boys, not as like Animoca big boys, but we're older, right? In terms of management team, we're sort of like 40s, 50s kind of management. So we've been through like different cycles. We've seen things. We want to do like things like KYC, AML, CTF. All that stuff is important because when money flows, you have to be careful what happens to it, right? So it's really important that we do things right. And I think ultimately, banking crisis is one thing. It's really not caused by crypto. It's really caused by the low rate environment. Then now it's a high rate. And the crypto markets obviously has gone through volatility as well. But a lot of stock, right, and equity, the market has gone through similar turmoil as well, right?
Yeah, I heard that Xi Jinping is actively promoting crypto, and it's going to be the policy in the next year. So I am super hopeful about this.
Yeah. So let's put it this way, right? We were very hopeful even since last year because we knew for a long time that China is actually very blockchain friendly, right? Yeah. But it's when they announced that, we don't want cryptocurrencies in China, to us it's super understandable because the RMB itself is not convertible. Right. So if RMB is not convertible under a capital account, of course you can't have cryptocurrencies flow in the space, getting money in and out. Then the whole capital control system would fall apart. Now, the question is then, when is China ready for RMB to be convertible under capital account? That's not a question that we can answer, right? That's really has to do with the China economy itself. But not having cryptocurrencies doesn't mean that you don't want blockchain technology. Yeah, in fact, China has offered blockchain technology. And given, especially right now, that dollar is a reserve currency, right? And the fact that the dollar with a lot trade spat right now and a little bit less friendly, collaboration amongst the different nations right now. It's more important to have decentralization of commerce, right? So China sees that, and also not only because of that, not only in terms of cryptocurrency itself and CBDC and things like that, but also because digital asset is what the citizens want, right?
Yeah.
If you look at how the China market is, it has its own system, which is BDC.
Yeah.
There are a lot of collectors there, right? And people understand property ownership, and we feel that being in Hong Kong, China will use Hong Kong, leverage Hong Kong as its financial expertise, technology expertise. And by the way, in Shenzhen, Taiwan, right?
Yes.
Greater China is great, right?
Yeah.
For the whole digital asset space, right?
Yeah.
So tons of opportunities.
Yeah. Speaking of digital assets, can I add one more question about real world assets? And what do you think from China and also Hong Kong viewpoints? Like, what's your take of the combination of RWA and see if the time span, is it like too uncertain? Maybe it's not going to make it in 10 years or 2 years.
You mean tokenization of real world assets, right? Well, it's already happening, right?
Yeah.
I mean, first of all, we'll be careful, right? Because tokenization of real world assets itself is security.
Yeah.
Right?
Definitely.
So you go into a security token.
Yeah.
And there are entities that can issue security tokens. There's a lot of potential for that, right? I mean, anything that gets to the point where you get liquidity in trading is actually friendly to the capital markets. But to us, ultimately, it's not a 2-year, 3-year kind of thing. It's kind of like a now thing. It's already going to happen, and it's not any different. We don't see the tokenization of assets necessarily through cryptocurrencies or virtual asset space. It's a way for real-world assets to find liquidity and trading, which is on a different platform than it's traditionally found. It's definitely additive from that perspective. The question is that how do these real-world assets become more intermingled in the same trading platforms as the virtual assets? And how do these things actually interplay? That would be an interesting question to see, right?
Yeah.
So for that to happen, the virtual asset space actually needs to catch up a little bit to real world assets space. To securitize real world assets is not very difficult. Right? You can do it now.
I see. Well, thank you so much
for
being with us.
And thank you to come join us in Taiwan, right? It's great to see you.
Yes, I will be definitely here in Hong Kong and hope to see you.
Yes, yeah, great. Thank you.
Thank you.